Barry, it's interesting to see and really hear from your viewpoint that we are seeing people come back to Canada from an immigration perspective. How that's great and fascinating to hear, because that does put an upward momentum in terms of economic growth, I would think. What exactly are you seeing?
Well, there's no question that we were projecting something like 100,000 people moving into Canada from outside of Canada. We're projecting this year we're going to have something like 300,000 people coming back in. So we for the last 2 years, because of COVID, we just had a miss on the numbers. But we just think that's going to add fuel to the fire. I think it's going to put a lot of pressure, to be quite frank, on the rental markets, which will actually help the investment of real estate if someone is buying it as an investment. So, and I've seen that in the last 4 to 5 months. I've seen the rental rates go from approximately $3.50 a square foot downtown Toronto to something like $5 a foot. So, so there's no question that immigration helps. Canada also, as a country, is the second safest country in the world. It's looked at as the top 3 countries in the world. The currency, which I can never figure out, is Canadian dollar to the U.S. is trading at roughly $1.30. I think it's way undervalued compared to where it should be. So I just think it's a good story, and immigration, there's no question, helps create more wealth for owners of real estate assets in Canada, and it also provides vibrancy and economic stability for Canada as a whole, not just the real estate.
And our viewers should understand that you invest in Canada and the United States. You can do it wherever you want. From a real estate investment perspective in Canada, what specifically interests you right now?
Well, we continue to invest in condominium high-rise projects and mid-rise. We also have gone out and looked very closely at the office market. We think that that market had some hurt in the last 12 to 24 months. So we're actually really eyeing some really cool assets in Canada on an acquisition basis. And in New York, we have a very large, substantial rental project that we actually commenced, and then we put it on the back burners because of what was going on with the COVID situation. And it's actually interesting that now that we're back and we're going to commence construction shortly on about a 600,000-700,000 square foot site in New Jersey by Journal Square, and the rental market has gone up 30% from when we were going to start to where we are now. Now, granted, it's going to take 4 years to build a project, but it just, like, COVID was a bad thing, but on the other hand, it's actually helped the stability of the project on the other side. So hopefully I've answered your question with respect.
Well, you did. So a couple questions. You're looking at offices in Toronto.
Well, we're looking at, that's one, we're looking at a class of real estate that got really beaten down, and people are trying to not understand how to deal with it. I mean, we continue to also stay tuned to our own asset class, which is condominium high-rise living in downtown Toronto, and there's just so much more demand for it now than there was before. So we're not going to, we're going to stay tuned to where we are, but the other market that I just talked about has a lot of potential, I believe, the office component. And we, in fact, have acquired a few buildings over the last few years and the last, months to add to our portfolio.
So we're going to go back to work in an office. I love it.
I think we're going to go back to work. I'm not sure I'd want to be an owner of a restaurant in the food court, but I think the rental rates are going to go up, and I think that there is going to be a demand for people to come back, and I think that when people come back, they'll want to have more space per person as opposed to less. So there's going to be a demand for more space usage, and in fact, we have a very large portfolio in downtown Toronto that we just renegotiated a 400,000 square foot lease, which wasn't technically supposed to be negotiated for another 3 years, and it was a substantial commitment by a very, very large company for the next 20 years. So that was actually very interesting to me. That was a good sign.
Yeah, it's a great sign. Also interesting to see that, people want to return to the cities. That's a change. We're going to take a quick break. We'll be right back.